and welcome to Ticker Tapes, and today we're diving into the world of high-growth stocks. The recovery in growth and technology stocks ran into a brick wall at the end of last week as concerns about an imminent Russian invasion of Ukraine swept bullish sentiment to one side. The Nasdaq 100 finished the week down 3%. Friday's losses erased gains made earlier in the week, and year-to-date, the growth stock benchmark is now down 12.66%. Tesla's stock price fell by almost 5% on Friday, driven by the news that it was making an additional recall of cars, a so-called boombox feature which allows owners to play music and other audio through an external speaker could obscure alarms linked to vehicle proximity. That means that the cars don't meet federal standards for minimum sound requirements in electric vehicles. It is thought 578,000 will be recalled by the EV manufacturer. Not all growth stocks were under pressure last week, however. Datadog was up by 11.41% over the last 5 days and by 12.65% over the last month. Datadog provides monitoring software and systems to the cloud computing industry, which, as recent earnings from Microsoft, Alphabet, and Amazon showed, has been growing strongly. Datadog reported Q4 earnings last Thursday and delivered EPS of 20 cents per share compared to Wall Street forecasts of just 11 cents. Datadog also guided higher for the first quarter of 2022, saying it expected revenue of between $334 and $339 million against analyst estimates of $306 million. Citi, KeyBank, Mizuho, Truist, and RBC all raised their price targets on the stock as a result. Goldman Sachs pushed their price target out to $250, highlighting a 63% year-over-year growth in the number of Datadog customers that are spending $100,000 or more with the firm. And if Datadog was flying high then, PayPal was crashing to earth. The stock fell by 8.56% over the last week, a period that included 2 consecutive daily falls of more than 3% in the last month. PayPal has lost 39.8% of its value and has posted 20 new lows. But why? Well, earnings and guidance published at the beginning of the month came in way below estimates. PayPal guided full-year 2022 EPS down to $4.60 to $4.75 versus Wall Street forecasts of $5.25 that sparked a series of broker downgrades and price target reductions, and it seems investors have little appetite for a growth stock that stopped growing, at least for now. If last year was all about the continued outperformance of growth versus value, then 2022 so far has been about a reversal of fortune, as we can see in this chart. Value in red has comfortably outperformed growth shown in black. Not that value stocks have had any easy time of it either, but they have held up far better than many growth names, which were priced for perfection but are now stumbling. Ahead of Monday's open, there were just 14 stocks within the Nasdaq 100 that had a positive one-month performance, and only 19.8% of stocks in the tech benchmark were trading above their 50-day moving average.